Good to see you.
Likewise.
Yeah, let's start with Ben Bernanke first off. Did he say anything that surprised you? Prepared to do more?
Yeah, they're prepared to do more, but they're probably unlikely to do anything in the near term. I mean, this is a FOMC that is increasingly a little bit divided, and also probably see the economy run around where they expect it to be. So, as Blankfein said earlier, it's sluggish, but it's still growing.
Yeah, you actually thought that Blankfein's comments were more interesting than Bernanke's comments because he's sounding really bullish, isn't he?
He's sounding really bullish, but in a sort of realistic way, right? I mean, you're still left with an economy where there are challenges to the upside because big parts of the world still needs to deleverage, but there are also supports to the downside in the fact that many corporates and investors around the world have already raised their cash profiles quite significantly, and that's also cushioning the downside.
Yeah, that's so interesting because I thought it was so remarkably clear how Bernanke was or what kind of language Bernanke was using, because he really isn't as straightforward as he was. He says additional bond buying still very much on the table. Does that indicate to you that we're definitely going to get another round of QE3? Are we going to get another Operation Twist? I mean, what does it say about stimulus in the future?
I think they are viewing that as an insurance package that they're ready to utilize, but I don't think that the near-term probabilities of that is higher than 50%.
Oh, it's not higher than 50%. So it didn't change at all your view of the fixed income markets?
Not really. And I think, when you look at bonds, and, we think this is still a very constructive environment for bonds, mainly for those reasons, Not too much upside, not too much downside. Speaks of an economy in a range, and therefore bonds in a range, and bonds and corporate bonds look quite attractive in that environment.
Yeah, you have a pretty bold call because you're going contrarian here, calling China high-yield credit worth buying into. Given the corporate picture that we've been talking about, all these misses, I mean, 60% of companies have reported have disappointed, whereas on the U.S. side, you have 80% of corporates beating estimates. So what are you seeing on the China side?
So I totally agree. I mean, it's been a very challenging environment for corporate China, and, we've had almost 2 years of extremely tight credit policies in China, and they've really put the squeeze on the so-called excesses. But the earnings season that we've just seen at the end of the day is backward-looking. And I think if you're meant to be forward-looking, what you're supposed to focus on is the fact that Chinese banks, and also outside of the banking system, increasingly there's willingness to lend to corporates that really hasn't been there in the past 2 years. And for corporate bonds, it's not so much the growth outlook that matters, but the availability of credit, and that's what we think is changing.
Well, people want to talk about yields. So, Victor, how much can you make betting on these China high-yielding debt?
Well, if you don't expect bonds to move at all over the next 12 months or so, if you only expect to be clipping the coupon or earning the yield, then you're talking about between 9 and 15% for reasonably high-quality companies, which is one reason why I still think this is a out-of-consensus call. This is an asset class that I think is both unloved and under-owned, if you
Well, if you can get 9 to 15% returns, I mean, I'm sure investors would probably want to take a closer look. So, Victor, can you be more specific? I mean, are there certain sectors of debt that you would prefer over others?
Yeah, we particularly like the property sector. The property sector is extremely sensitive to these small changes in credit conditions. It's obviously been at the forefront of the negative policy that we've had over the last 2 years. So if you think that that policy cycle is starting to turn, then this is the sector that's going to benefit the most. So sell homes, buy bonds.
That's interesting. Sell homes, buy bonds. That's bold. Okay, thank you so much for your time today, Victor. Very interesting.